So let's go on to what is angel investing. Okay, so angel investing typically involves affluent individuals, often referred to as angel investors, using their personal funds to provide early stage capital to startups and entrepreneur ventures. So these investors are crucial for startups that are too early for venture capital, okay, but need funds to develop their products or services and scale their operations. So what are some of the characteristics of these angel investors? You may find that they're wealthy individuals with disposable income. Often they've accumulated significant wealth or savings, and they're looking to invest a portion of it in high risk, high reward opportunities, which often startups are. And their investments can range from a few £1,000s to several million pounds. Okay. There may be also members of angel investment groups. So many angel investors choose to, I think we have somebody else wanting to join. Rebuy entered the waiting room. Okay.
That's all good. I'm taking care of that stuff.
Perfect. Okay, excellent. Thank you so much, Fred. Okay. So we also have members of angel investment groups. So many angel investors choose to operate as part of an angel group or networks. And these groups pool resources and expertise to assess investment opportunities and more effectively and reduce individual risks. So nowadays, we find that there are more niche angel investment groups. So you might find groups that are tailored specifically to your background or your business, and you can tap into those. And then we have successful entrepreneurs. So a notable portion of angel investors are also successful entrepreneurs themselves. So they often invest in startups to give back to the entrepreneurial community, using their experience and networks to guide new entrepreneurs. And then we have venture capitalists transitioning into angel investors. So some individuals with experience in venture capital industry also transition back down into angel investing. And this move allows them for more personal discretion with their investment choices and opportunities to engage directly more with startups. And then we have two more. We have family offices. Okay, so these are super rich families who have offices which manage their investments. These are high, as I mentioned, super rich, high net worth families. Often they also engage in angel investing. Can I get everybody to please mute? Thank you. Thank you. And this is tends to be part of a broader strategy to diversify investments, okay, and potentially tap into emerging markets or technologies. And then finally, we have individuals that are super passionate about entrepreneurship. So there's a large segment of angel investors. They might not have extensive business experience, but they're driven by a passion for innovation and entrepreneurship. And they're motivated by a desire to be part of the next big thing, okay, and to contribute to a startup ecosystem. So let us understand then the role. Yeah.
Do you interrupt you for a second? Apologies. Are you aware that we're seeing your notes, or?
No, I'm not. Okay.
Just your presenter's view. You can swap displays at the top there in the presentation. There's two arrows.
Perfect. Can you see?
Well, let's see. Not yet.
Let's see.
Yeah. Now we are going to be. Can you click swap displays at the top?
Okay, hold on.
No. Go back to where you were.
Okay, give me one
Presenter's
second.
view.
Sorry, you've disappeared from my screen.
That's fine. No rush. Look at that.
I apologize.
No, it's not such a big deal, but it's
yeah.
If you do that and you click swap displays at the top, do you see those two arrows there? To the no, you left. Yes. That's the one.
Excellent. Better.
Excellent. Absolutely.
Excellent. Thank you.
You're good.
Okay. So not all investments are created equal. All right. So you have dumb money and smart money. What is the role of angel investors? Could be more than just finance. So beyond providing capital, angel investors offer mentorship. They can also advise entrepreneurs in whom they invest in. They can leverage their experience, knowledge, and networks to increase the chance of the startup success. And they can also offer you that early stage support. They typically get involved during the early stage of the startup, filling in vital roles before you're ready for larger scale venture capital investments. Okay. Then, as I mentioned, we have smart money, which is when the investor provides more than just the financials. And then you have done money, which is essentially when the investor just provides you with the capital. So what I would just like to mention to you here is that it's so important. Not all investors are the same. You need to pick those that, number one, you have a good chemistry with, that align with or share similar vision to you and for your business. And number three, I would like to recommend and suggest that you really need to take an audit of your skills and knowledge, strengths and weaknesses. Once you identify what your strengths and weaknesses are, you will then be in a better position to understand whether you need smart money or dumb money. All right, awesome. Okay. So what is the basic concept of angel investing? I can hear some background noise. Can I get everybody to please mute? Thank you so much. All right. So the basic concept of angel investing, you can see some phrases, some words on the screen, such as equity, cap table, due diligence, startup versus business, B2B, B2C, D2C, B2B to C, valuation, convertible note, term sheet, exit strategy. You may or may have not heard of these terms before, which is absolutely fine, but now is the time to definitely start getting familiar with them. So let's go over a few of these terms. Okay, the first one, which is super important for you, equity. It's in the simplest form, equity represents ownership in a company. When an angel investor invests in a company, they receive shares or ownership stakes in return. So why does this matter? It matters for you because equity, essentially, as the company grows, so does the value of the equity, which can lead to significant returns for angel investors if the business succeeds. Okay, so simple example is that there are many angel investors who would have invested early day of Facebook or Uber or Instagram, and they had equity in the beginning, okay, which grew as the company grew. So their money, they may have invested £1,000, but after the company continued to raise funds, grew, the business grew, their income also grew, the amount of money. You had many millionaires and success stories out of that. Then you have cap table, okay? So a cap table or capitalization table, essentially, in its simplest form, is a spreadsheet or table that shows the equity capitalization for a company. So it would list all the company shareholders, including the investors, the founders, and the respective percentage of ownership and the value of equity in terms of share price and the amount of investment. Why this matters is because the cap table is essentially for your understanding of the company's ownership structure and the investor dilution and the value of equity over the time through various funding rounds. That means, simply put, is you need to have a solid understanding of who owns what in your company, because as you grow and as you take more investment, your shares may dilute, okay? Or you may have different types of shares, okay? You have different types of shareholders. This means different things for the company. Some people may have more rights over others. It's really important that you have a good understanding of this as you go through this fundraising journey, and then as you grow your company as well. The next term we have here is due diligence. So in terms of due diligence in angel investing, this refers to the process of researching and evaluating the potential investment and the investors, okay? So this may be from your end. If you're doing due diligence on an investor, then what you could do is go and find out or ask them, what are some other companies that you've invested in? And then you would be in touch with those companies, those founders, and get information about this investor. Was this person a good investor? Were they helpful, or were they difficult? So they will tell you hopefully they'll tell you the pros and cons of this investor. So when you do due diligence, you can make much more of an informed decision as to whether or not this investor is right for you. And it helps you to mitigate risks as well. Then we have startup versus business. You might find that people use this term interchangeably, okay? So simply, we can think of it as startup is an idea that hasn't got a solid business model. Some people say this, that a startup is a business without a proper business model, and a business might not have the same growth focus, and it might be more steady and have incremental growth, okay? Why it matters is that sometimes this distinction helps investors identify the type of company they're investing in and then have the appropriate expectations for growth and scale. Then you have B2B, B2C, D2C, B2B to B to C. You have other terms such as SaaS and etc., which I haven't listed here. But these are important because, you know, just earlier on today, you all shared your information on your companies and what you do. And it seems like you have different types as well. So it'll be good for you to understand which category you fall into. So B2B is essentially stands for business to business. Okay, so that companies that sell products or services to other businesses. Then you have B2C, which is a business to consumer, and that's companies that sell directly to consumer. Okay, and then you have D2C, okay, which is a subset of B2C, where companies sell directly to consumers, but without intermediaries. Okay. And then you have the B2B to C, which is business to consumer. And that's companies that sell their products or services to another business that then sells it to consumers. This might be you, for example, a B2B to C might be you have a business, a toy business, you then go ahead and sell that to John Lewis. John Lewis then goes ahead and sells that to the consumer. Why this matters? This is super important for you to understand because it also shapes your business model, okay? And then helps investors assess the market strategies, potential customer base, and then growth strategy. You know, when you determine this, if you're B2B or B2C or D2C, then you can obviously understand and assess the size of your market, which is super important. Another term which you really need to understand is valuation. And this is the process of determining the present value of your company. Okay, in the context of startups specifically, it often refers to the pre-money valuation during a funding round. So when you go to an investor and they say, what is the valuation? You may give them a figure of £1 million. On what basis? It's really important for you to understand on what basis you've come up with that figure. Okay, how did you determine your valuation? And for the investor, it's crucial to understand because it impacts their investment terms and the percentage of ownership they receive and the potential return on investment. The higher the valuation, you know, the more difficult it will be to get funding. Okay, the better it is for you, but the more difficult it is to get funding. And then also, you know, the potential return on investment for the investor may be lower. Okay, so the next thing are some terms that you need to know just in terms of with relation to the term sheet. So a convertible note, okay, these are in terms of the agreements that you make. So a convertible note is a form of debt, okay, so it's just short-term debt that converts to equity. And typically it's used in future financing rounds. It's often used to bridge finance between two equity rounds, okay? So between, let's say, pre-seed and seed, you might have a convertible note. You know, you might go and try and get a convertible note within those two funding rounds, okay? So why this matters is because for investors, convertible notes are a way to invest in the company at a discounted rate compared to a later investor, okay? And then we have two more terms, a term sheet. So term sheet is a non-binding agreement setting forth the basic terms and conditions under which an investment will be made. It serves as a template to develop more detailed legal document. Why this matters is because when you will be going out to get angel investing, the term sheet will be the document that outlines the key aspects of your investment deal, okay? So, and that includes on that term sheet your valuation, all these terms that we've discussed earlier, the equity, the cap table, the dilution, the valuation, you know, the rights, all of that will be on the term sheet. And then finally, the exit strategy, okay? Exit strategy is super important because when you go to these funding meetings, you will be asked this question: what is your exit strategy? So this is your planned approach to liquidating an investor stake, okay, in a financial asset or business venture. Okay, so some common exit strategies include IPOs, which is initial public offerings, acquisitions, buyouts, or mergers. So you'll find that a lot of businesses, a lot of startups, founders will set up startups because of the exit strategy, they may just want to invest 5-10 years building this up and then selling it out later on. Okay, they may not be in it for the long run, for life, maybe not be a family business. They want to get out of it quickly. You know, they want somebody to acquire the business to buy out for £1 million maybe, you know, or they might want to merge with somebody, or they might want to go on the stock exchange. It's really important for you to understand, as you're getting into your business, what is your exit strategy? Because when you go to an angel investor and start raising money, you know, it's really important also for that angel investor to understand what your exit strategy is, because it provides a pathway for them to realize what is the return on investment for this business. Okay, so typically after the startup has grown and become successful. Okay, so do you really want to do it? You should definitely have a good reason. Okay, so I'd like to have you consider your motives. I want you to understand your why. So before seeking external funding, it's essential to understand why you need it. Okay, think about the questions that we asked earlier, those 4 questions. Is it really important to get funding to scale your operations? Is it for product development? Is it for market expansion? Ensure that the reasons align with your long-term business goals. And then you need to weigh control versus capital, the trade-off. Okay, just recognize that once you bring investors on board to your business, then you're giving them a degree of control for your business, okay, over your company, and they have a say in key decisions and direction of your business. Okay, so ask yourself if that trade-off between capital and control is worth it for your business venture. And then the ongoing commitment. The search is endless, okay? So the process of finding the right investors can be super time consuming and may distract you from running your business and doing the operations. So the search for funding is not a one-time event, but it's a continuous commitment. As I mentioned earlier, it can take you months. And as your company grows, it requires additional rounds of investment. So you need to always plan for that, you know, because you'll always be in a position where you're running out of money and you need to raise more money, and it takes a toll on it can take a toll on somebody and on the business. So you need to just think about that. And then you also need to plan your exit strategy considerations. It's not just about getting the funding, but it's also about planning the end game. Okay, how do you plan to give returns to your investors? Whether it's through an acquisition or an IPO or another strategy, have a clear exit plan in place, because this plan affects how you run your company and the decisions you make from day one. So now we know that you want to do it. How do we prepare for it? Okay, so I think that understanding and aligning the expectations of angel investors and the founders is super crucial for a successful partnership. From my perspective, here are some of the key expectations to consider from both perspectives. Okay, so first and foremost, what is the return on investment? So if we look at the left-hand side panel, okay, this is for like the angel investor. What's the return on investment? Okay. Then think about the risk mitigation. Okay. Involvement and support. How much do you want, dumb money or smart money? The accountability. You know, you have to remember that as soon as investors come on board, you'll be accountable to those investors. Okay, you'll be continuously having to provide them with reports. You have to continuously let them know that you're on target. You have to be accountable when you miss targets as well. And then alignment of values. Are you aligned? Some of you may have companies with social missions. Do your investors have those same alignments of values of having social missions? Is that important to them, or is just making money important to them? I think we need to consider that as well. And then finally, your clear exit strategy. Okay, so they're going to be thinking about what is your exit strategy. If you can answer all these questions, that'll be very good for the angel investor. And then for you, okay, money, money, money. Again, smart money, dumb money. What are you looking for? What are your strengths and weaknesses? What do you want from this angel investor? Maybe for many of us here, when I joined TERN, one of the things that I realized is I don't have access to networks. So for me, it was super important to have an angel investor who had access to those networks, who could then introduce me to other angels, you know, essentially open the doors to me to enter those rooms, to have those conversations. Okay, mentorship and guidance. It was super important as well for me. I didn't have all the skills and knowledge. I think having a level of self-awareness as a founder is very important. You cannot do it all. And there's no problem in getting help and support. If anything, I think for an investor, when you can be open and transparent and say, you know, my strengths are, I may be technical and my strengths are all technical, but I struggle with the fundraising. I struggle maybe with the operations, the day-to-day operations, whatever it may be. I think taking note of that is very important, okay? And then maybe that angel investor can be more hands-on. You know, maybe it's not just that money. Maybe they can actually support you in different areas of the business. As I mentioned, those networking opportunities are super important. And then a reasonable valuation. You don't want that angel investor. You may be in a position where you are desperate for money in your business, but please ensure you negotiate a reasonable valuation. Do not undersell yourself and do not undersell your business, okay? Just for money. It's not worth it. You know, sometimes you might have like an angel investor who might ask for a large stake of equity in your business, 50%, but might be offering you money that you haven't had before, and you think that's good, but you're giving away 50% of control of your business, of ownership rather. And then flexibility and patience. So you need to be flexible as well and understand that, you know, if that angel investor is investing in your business, then they also have a say. So you need to be flexible in that and also be patient. And you need to also, for that angel investor to understand that if you're doing this, and maybe some of you for the first time, that they need to be flexible in their approach with you. They need to be patient in their approach with you as well. And maybe you're new to some things and you need their support with that. And then also, final thing is you just both need to maintain respect for each other. I think that's very important. Okay. So then, advice on term sheet components. So in terms of term sheets, you can find templates online. So Startup YC Combinator has a template online. You can get them. They tend to be 1-page, 2-page documents, okay? But you need to understand what the implications are of this. So as we mentioned earlier, the valuation is the valuation of your company affects how much you give away for investment. So aim for a fair valuation that aligns with your company's stage and potential. Be prepared to justify. Have a solid rationale for your valuation, supported by market research, financial projections, and comparable deals. You may already have started your business, okay, and that will support you a lot when you're fundraising, okay. If you have any social proof, you might have a social media page with a large number of followers. You might have a large number of subscribers. Or you may have made some sales already, okay, had great reviews. Think about ways in which you can justify your valuation. The more data, the more social proof you have, the better it is for you, okay? Then the board of directors, okay? So balance is key here. A well-structured board can provide invaluable guidance for you, okay? So ensure that the power balance for you allows for the founder, yourselves, to retain significant influence while benefiting from the expertise of investors. So please choose wisely, okay? Again, the board members should bring more than just money. They should have experience, connections, and a genuine interest in your company's success. Option pools. It's very important to allocate early. And this is usually advantageous to set up an option pool before setting up your valuation, as it can impact the price per share. You need to plan for the future. Okay, make sure that the size of the option pool is sufficient to hire and incentivize key employees as the company grows. A lot of times in startups, you see that lots of super ambitious, creative, smart people want to join startups in the hopes that they will also have a share within the company. So lots of companies, as part of their packages, they would have the salary, but they would also have an option pool for employees. So people hope that, they can actually cash out on this essentially. They're working for a startup, which is super exciting, but at the same time, in the hopes that this startup will blow up and that they can actually cash out on it later on down the line. And then think about anti-dilution rights. Understand the different types. Know the difference between the different anti-dilution provisions. Okay, if you can do your research on this online later on, I know there's lots of terms here. Happy to share this presentation with you later, and you can review these things. But it's super important for you to understand the various rights as well. Anti-dilution rights are those provisions. are more founder friendly if you use them for yourself, because you don't want someone to dilute. The process of diluting something is to make something weaker. Okay, so you don't want to dilute any rights that you have. And obviously it's super important for you to negotiate fair terms. You need to strive for terms that protect yourself from dilution, but also remain fair to the founder and future investors. And then the voting rights. Okay, define clearly what decisions require a majority or supermajority of votes. Consider the long-term implications of voting thresholds on company strategy and governance, and then protect key interests. Ensure that the founders maintain voting rights on critical issues that affect the company's direction and core values. You do not want to be outnumbered on the boardroom, because if, say, for example, you want to take a direction in your business and you have less voting rights, and then the board of directors have more voting rights and you're outnumbered, then they could go ahead and move the business in a different direction, contrary to what you want. And then you have dividends. So prioritize your growth. In growth stage companies, dividends are rare. This essentially means, paying out investors, and you can't afford to continuously pay out investors because it would hinder your growth. You want to reinvest those funds into your business. So understand, be aware of the concept of preferred dividends, which are typically associated with preferred shares held by investors. You just need to understand all the different terms and what that actually means for you. Okay, perfect. Excellent. And now we will welcome our champion, Yama, who is the TERN champion, entrepreneur in residence at TERN, and founder of Sensei AI, former boxing champion, and expert in cognitive aspects of entrepreneurship. So we will introduce you to the technique and psychology of boxing to improve your performance and resistance to stress. Okay, Yama, I will be asking you a few questions. Firstly, I'll hand over to you to introduce yourself, and then I will be asking you a few questions.
Yes, thank you so much. No, that was a very interesting workshop you gave. So it's also for me a refresher, because I'm in the middle of raising funds and getting ready, all the metrics, all these things. But let's check if everybody's still in the room, because they gave a lot of gold nuggets information. Yes, so that was really great. So is everybody with us there? Can you guys follow it?
Yeah.
Do you get... Okay,
I'm
great.
here. Thank you
Lena,
for the information.
Ruby?
Yeah, I'm here.
Yeah,
Awesome,
yeah.
awesome. And yeah, feel free if you want to open up your webcam. It's also nice to see people, because I'm feeling like I'm talking to the wall. So my name is Yama Saraj. I'm a founder of Sensei Technologies. I'm based in Paris. I'm from the Netherlands. Hey there, thank you. So I'm based in Paris Station F. There's a very nice startup campus called Station F. And yeah, so there are lots of investment firms, venture capitalists. So yeah, it's just we had a little informal setting. So feel free to ask questions. So I'm working on my startup. It started as a social business. I wanted to bring boxing for a wider audience. I did competitive boxing in Netherlands. I have some engineering background, and I studied also economics in the Netherlands. But my family is originally from Afghanistan, and I wanted to do something for my country of origin. I wanted to use boxing therapeutically to address post-traumatic stress disorder with conflict affected communities. So I've been like 4 to 5 years now busy with my startup. Also starting bootstrapping, and so I went through the juggles and hustle and bustle of setting up a startup with very few limited resources. I set up a company in France. We got our first investment with some grant from French government, and now I'm talking to angel investors and VCs. Yeah, so I'm in the middle of all the things that Aya was talking about. There's a lot of work, and you need to be a specialist. You need to have someone who's really dedicated towards finance and fundraising. And myself, I'm not a numbers guy. So I'm also juggling with a lot of these things. So I thought maybe I can, if you guys want, if you're up to it, I can go through my pitch deck and maybe take some questions, or we can do it any way you want. Aya, you had some questions, or maybe some people in the audience, they have questions.
Yep, I have some questions, but let me just check to see if there's anyone that's put anything in the chat.
No questions just yet, but it sounds very exciting. Yeah.
Excellent. Awesome. Thank you. So maybe Yama, I have a first question for you. So what was the biggest learning curve in terms of preparing for investment?
Well, that's a very multifaceted question. I think, you know, also what you elaborate on is have a clear understanding of the expectations of your investors, but also a very good understanding of your own needs. So I'm busy in Station F and startups, like, you know, they're looking for scalable tech businesses, and everybody's so much focused on venture capital, venture funding, but they're perfectly fine. There are lots of companies that don't need to raise any funds at all. So sometimes because of the social pressure, we think, oh, I need to raise funds with VCs. And so I think, you know, having an understanding of your needs, but also the investors you're dealing with, so to set up the right expectations. What I also realized with investors, you also need to show traction. You actually need to show that your business is viable, right? Especially in the early stage, you have a concept, you have a vision or idea, so you really need to demonstrate or signal that you know what you're doing, and that's a whole game, like, you know, showing traction. Yeah, there are some signals. Okay, you need to have the right team. You need to show that there's market for what you're building. You got some letters of intent, or so actually you need to show that that you don't need investors and that they will be missing out. So that I think was a very valuable lesson. And of course, I realized like how important it is to have a very good pitch deck. And you could maybe invest in that or hire a professional designer, so it's not a luxury to do so. And of course, the financial legal aspects, which I'm also having trouble with, I need to address that. And you have very good platforms like Seed Legals, and they can address that. So I think that would be the learning curve I would share.
Thank you so much, Yama. And so how do you think can you share with everybody how you've made connections with investors?
So of course it helps. It helps if you're going through good incubation programs. So as I said, like I'm at the Station F. It's like a massive incubation program. There are like 33 incubation programs. There are 40 venture capital firms. I come from the Netherlands. I come from the south of Netherlands in Eindhoven. It's a industrial city, and we have amazing high-tech manufacturing scene. But there's not a vibrant startup scene like in London or in Paris. So the startups are focused towards the industry. So they're not like that much VCs or investors. So I never meet a VC in London and in Eindhoven, my hometown. So I came to Paris. I got a fellowship at this incubation program. And I think the second day already, I met a VC guy. And that was the first time in my life I meet a venture capitalist, and he's like quite exclusive folks. And this guy, I couldn't believe it. He was looking for tech talent from immigrant or refugee background, and they were asking for input how they can make VC more accessible. So he offered me a fellowship. It's called Included.vc. I will share the link, so if guys wants to grow into this industry. By some luck and some chance, I got into this program. So I followed like 1 year. It was a venture capital fellowship to learn the other side of the table. So how the investors think and how they reason, what's their business model. And so that was a very, very valuable lesson for me. So that's actually how I got into the network of VCs, investors, and now at TERN, I'm helping along, sharing my experiences, we're trying to also design an incubation program / investment funds. But yeah, I'm very proactive and engaging and networking, going to these events. So like I put a lot of time in developing these relationships. I think it's a very, very important. Does that answer your question? So it's not straightforward, like, okay, there's a list of VCs, so you need to go into this specific industry network events, the incubation programs, introduce us. So I went through various incubation programs.
Have
so
you
it
tried
really
cold
depends.
calling? Have you tried cold calling investors?
No, there are internet lots of mailing lists. You can find a lot of VCs, but I think after following this venture capital traineeship, I realized how this works. It's incredible small, tight-knit communities. So you really need to be in the right networks, old boys networks, the Oxfords and the Cambridge, and in France you have this HEC net. So you really need to go and be part of these social clubs or clubs, and it's very hard to get in between. So it's incredible challenging, and there's a problem in how venture capital or investment is distributed. So it's mostly relationship based, and but then down the road, I'm learning the social codes, how to signal. You need to go to the right grandes écoles, in France they call it. So checking up, I'm learning by trial and error, and that's, I think, one way to do it.
Wasn't quite sure what that was.
Seed legal is, I think, to get funding, to get ready for funding, you need lots of documents, especially in France, man. This country is so complicated. So you need to have a lawyer by your side, to get ready to raise funds. So seed legal is I found it quite affordable platform. I think we pay like €1,000, and they take care of all our legal documents and help you to get ready, and also the stock options thing that Aya mentioned. So let me send you the link in the
it also has cap table,
chat.
doesn't it?
Cap table. So I found them quite, because if you go to a lawyer's firm, they're so expensive. €10,000 easily you can spend on lawyers. And I think these guys, what they did is kind of make a platform where all the legal aspects are automatized, and you can keep traction and also of your pitch deck. So if you want to get ready, I think, yeah, for me, this is a very good solution, Seed Legals. And I think they're also country specific. I think they started in the UK, and they're also now in France. So we're in the early stage of our company, and there are some methods, but in the end, it comes to just we say in Dutch, not the vingerwerk. It's just guessing or guesstimation, or it's up to you, and also up to the investor. So there's discussion. How do you value a company, especially if you don't have revenues, you don't have traction? You can look at network, your goodwill, whatever. So for me, it's not an exact science. It's not like so it's just up to your bargaining power, but also confidence. Sometimes people from immigrant background, we tend to undervalue ourselves. And yeah, this is quite an issue. So it's up to what you think you're worth. So you need to start with understanding what you have, your network, your concept. Do you have some technology that you can protect, or if you have some specific brand, or some competitive advantage, or so it's not the exact science, the valuation. I think you can make estimation. I had for me, our first investor, he wanted to invest €300,000 for 20% of the company. So that gives you a valuation, so it's also how you negotiate, how to position yourself. So the incubation program I'm part of, they told us you can get a better deal, forget these guys. And then a few months later, we got a deal to get 500K for 20% of the company. So yeah, and I'm still negotiating and talking with these guys, right? They involve their lawyers, talking. So it's a game, So how do you, especially the first rounds, especially with angel investors, before you go to VCs. I think VCs later stage, you need to show that you have a product, at least, that you also have some market, some customers, some revenues. So it's not straightforward. It's also having the confidence to, okay, say, this is my word, you know, take it or leave it.
I definitely agree.
Yeah.
With
Oh,
it, definitely got the confidence, but
I'm like sometimes also very desperate, like as someone from immigrant background, you think like, oh, I have nothing to offer. But yeah, sometimes we should be conscious of our own imposter syndromes of other people project some low expectation patterns on that. So I'm aware of my own flaws sometimes there.
thank you so much, Yama.
So what we're trying to address is the burnout issue, work-related stress. This costs 2.5 billion euro every year in France. And as we speak, we have 2.5 million people having burnout. And future employees, students, they're also facing anxiety and depression. And so this is the area of the problem we're working on. Now, burnout, mental health in the workplace is a multifaceted problem. We cannot deal with everything, such as a toxic environment or workload, but you can give people the tools to enhance their resilience towards stress. But that's, for example, to support sports, and specifically we want to sell sports psychology in an innovative way. So what we're developing is a virtual coach, and with this you can track your performance, you set goals, and keep track your stress level. And yeah, this can integrate with third-party hardware such as sensors, or we have been developing camera systems with AI. But I'm very much interested in personalized content creation. Myself, I'm a boxing coach. I love giving boxing classes, and I want to automatize myself somehow so I can be there for everybody. So this is the founding team. My co-founder, he's a AI specialist, and we have Florian. So we need to put a white guy in the team, otherwise nobody believes us, you know. But jokes aside, he can help us with the idea we have, what we could patent, the sensor fusion. And then we have some students working with us. So this is all about this extended team. This is the competition and how we can position ourselves, how we differentiate from existing market parties. I've been talking to customers and with HR managers, and they told me they already have sports contracts. They're trying to serve their employees with wellness solutions. And they told us you can differentiate by actually engaging our employees, because we have already sports contract, but our employees are not making use of it. So my idea is to sell wellness programs and incentivize the employees that if the more they do sports, the more they also contribute to a social cause. So in this way, they can also contribute to sport for development in less privileged communities. So that's why I'm positioning myself, and we've been talking to the syndicate, or the union of employers in France. The Olympic Games will come to France, and the Olympic movement, Olympic Games are big happening this next year summer. So I'm trying to make use of that momentum. And around our product and services, the value proposition is we want to, for companies, build communities, bring personalized coaching, and destigmatize mental health using sports-based intervention. And we make the link to data-driven health coaching. So this is a little bit our technical roadmap. This is what we want to go towards: robotics, e-health for veteran healthcare. That's what I'm very passionate about. I'm at this military academy called École Polytechnique, and around post-traumatic stress disorder. I'm very passionate about bringing this to conflict-affected communities. But now we are focused on selling wellness programs. We're developing capacity around sports psychology. Hardware, I started with this, but then realized it's so hard to get in between the hardware market. So the hardware we do external, we work with external parties, and we can use existing solutions. And our core competences will be in AI modeling and developing personalized content creation, and also UI, UX, and gamifications. So the business model, I want to sell B2B software as a service to companies, to HR managers of corporates, And with that, we also sell employee engagement. So I don't want to replace the human aspect of coaching. So I want to bring top athletes, Olympic level athletes to companies to give 6 to 9 weeks training. So on that, we can take a little commission. And then the coaching, the virtual coach is 24/7 accessible for all the employees. And with that, they can also, we can create a dashboard for the HR manager to see the stress level or employee engagement, and they can also integrate it with their corporate social responsibility. So that's a lot with our business model. So this some figures about the market, the wellness market. We are trying to compete in the wellness market, corporate wellness, well-being. And if we can focus already in France and Netherlands, it's a huge chunk of the market. That's a little bit our target. So now I'm here. I'm talking with the University of Maastricht. So they could be our launching customer. So that will be really, really great. It will open doors for me for investment, but also for research. And so we're raising 500,000 as pre-seed round, and we think we can break even this with these figures I show you before. So that's a little bit our financial projections. So right now, as we speak, we are talking with a research institution to research boxing therapy politically, with a syndicate of this employers, and also with influencers, famous boxing champions, to help us create content and make partnership with us. So for me, the France is a little bit challenging because I don't speak the language. But I use my presence in France and Station F to open doors in Netherlands. I give the keynote speech of the opening of the academic year of Maastricht University, where I was talking about student mental health. And this I'm leveraging very well. So the university could be a great testing ground for me. They have 22,000 students. We can work with their student psychologists. They have a student sports center. So the university has policy around mental health and wellness, well-being. I'm already working with the engineering faculty, and we are aiming to do some medical trials. So tomorrow I have an appointment around this, so it's very exciting. And the university has offered me a position to work there. I can research entrepreneurship, so it's really, really great. And so yeah, that's how I'm like playing my cards. But nevertheless, we built also great partnerships and supporters at Station F. So it's super important to leverage the ecosystem you're in. Yeah, you need to have a board of advisors, mentors, coaches. Specifically, we are trying to be we are a deep tech, so we're a deep tech startup. So we need to have a scientific board. We need to have these universities behind us. So it's a little bit different ball game. So this is a little bit what we want to raise funds around. Sorry, I'm talking too much. I hope it's not boring. So that was in a nutshell my pitch deck. So anybody have questions? What do you think?
Fantastic pitch deck, Yama. Very exciting. Very exciting. Yes.
Yeah.
I love seeing other businesses grow. That's super exciting. Anybody want to share their thoughts on the pitch deck? Have you seen a pitch deck before? Do you have any questions on it or any comments or observations?
Looks like we've lost Mohammed. But yeah, it was really rapidly flowing, which was quite good, and it was easy to pick up on the points. So that some pointers there for me because I use too many words. But it was also interesting that you talk about not just monetary investment by angel investors. So that's actually when there's non-monetary investment, shall we say, is there still a legal agreement? Is there still an ownership in the business?
So you mean like sweat equity? So you mean some of mentors or people coaching us, they're guiding us, supporting us. So they care about me or the idea we have, the vision we have, and so they don't need any equity. So they're already happy to have some acknowledgement, or like, do I understand your question correct? Are you talking about the mentors, about the advisors?
Yes, I'm trying to understand, like, in some of the cooperation that you've gained, has, for example, with the fellowship that you've just started, or that you've been through, was there also...
Yeah, the fellowship is totally separate from my startup. The fellowship, they just want to recruit investors, right? So the fellowship was just for me a kind of education, so it's separate. So I have different kind of partnerships. Like, for example, this university, they're more than happy to have research done. So they have their own interests. So they don't necessarily take equity shares, but they can, they have other benefits. They want to say, hey, look at us, we are incubating this guy, or we this spin-off, there's research. So there's different kind of partnerships possible. I see we are
I think that's what I was trying to ask you. Yes,
okay.
thank you.
There's different partnerships. So one is from the investors, they want to get equity so they can make money on you, and others, like universities or incubation programs or the governments, they all have their own incentives, right? Why they support us. We get some funding from the French government because they hope we stay here, make our company, and pay taxes. So the university, they want research. The Olympic Games, they're helping us because of the social cause. So it's different incentives, and you need to keep these people happy. I see our time is up. Thank you so
Yes.
much, all. I'm very happy
Thank
to share
you.
my experiences. Feel free to reach out on LinkedIn with me. I'd be more than happy to keep the conversation going.
Excellent. Thank you
Yes,
so much,
thank you very
Cameron.
much.
Best of